In fact, let's analyze the numbers in greater detail. Ravikant Bhat, the research analyst at IndiaNivesh Securities, joins us on the show right now. Ravikant, good evening. What is your own review for ICICI Bank? The numbers looking strong, ex-slippages, I assume?
Well, yes. If I were to just go, from top line to bottom line, I think the only deviation that has been there from our number is basically provisions, and again, that's been an outcome of how the slippages have moved.
Right. You know, when you talk about the slippages, Ravikant, the numbers have come in higher than about 4,000 crore rupees. What is the reaction to the slippage number versus the kind of expectations which were doing the round, which were in the range of 3,000 crore rupees?
We were around 3,100, and we had not exactly accounted for the one-offs that could be there. So not really a negative surprise, I would say. I'm sure some of the stressed accounts have been thrown in over there, and that cumulatively is basically adding up to the 4,000 odd crore numbers. Net of that, my sense is this could be somewhere in the region of 30-31 billion.
Sure. The bank, Ravikant, has, or rather stock, I should say, has seen a run-up and a solid one at that in the last 6 to 12 months. Do you really think improvement that the street was expecting is reflected already in the prices, or are we likely to see further bump up in the stock from here also?
The numbers have been in an improvement trajectory, barring the one-off. So, even take that into consideration, this is not such a big deviation for us. So I think broadly the numbers are really good.
Okay. So do you see the loan growth for the bank being strong with the retail loan growth and would that continue really?
No, I think the retail loan growth has been for some time been hitting in high teens, and the real question over here was how long can this growth sustain? Because there obviously were visible signs of slowdown, and ICICI Bank, along with peers, for example, Bank has reported very strong numbers. So I think in terms of the domestic loan growth, the numbers were expected to be very good, and what is basically being reported.
Right. Ravikant, all private bank numbers have been declared now. Most private banks have seen, the asset quality worsen. How is it that you react to the slippages of the private banks, and where does ICICI Bank now fall within the rankings?
No, I think you need to look at it, each one separately, because HDFC Bank had its own agriculture slippage-related seasonality, and that caused the slippage. Whereas in case of Axis Bank, you had some corporate slippages happening. Axis Bank clearly was a case of that one can say of some bit of worsening of asset quality. Whereas I think ICICI Bank, including the one-off, I think it's a shade better.
Okay, Ravikant, good to have you on the show. Thank you so much for analyzing ICICI Bank's third quarter. In the meantime, growth slow.